Good morning and welcome to today's edition of 600 Seconds of Trading. Today is September 25th, 2018 and it's 9:05 a.m. In the morning here in London. So good morning to you guys if you're based in Europe. Good afternoon if you are based maybe in the Far East, Australia. And I guess hope you're having a good night. Still very early in New York right now. Okay, let's take a look at the markets, and as always we'll take a look at the Eurodollar, Bitcoin, gold, crude oil, and the DAX 30. We'll also see if there's anything else coming up. We'll take a look at the economic calendar as well. If you want to partake, join me here in the chat box. We have a hi here already. Don't need to be shy. As long as you have a YouTube account, you can follow the videos. You can get notification of new videos and when I go live, and you can comment. That's quite cool. And you can also like the videos. So if you are watching and you do have a YouTube account, don't forget to click the like button here to spread the word of this daily presentation here at tradecap.com, because it is a daily presentation. Now, before we look into the markets, I need to stress that trading financial markets unfortunately is high risk. About 79% of traders that trade Forex and CFDs in Europe lose money. So bear that in mind as well. I'm going to share with you guys my outlook on the markets, the levels I think traders are watching. I even talk a bit sometimes about my positions, but this is made with an educational purpose and it's not intended to be viewed as buy or sell recommendations. Okay, let's kick off with just a general overview. Just here to your left, sorry, to your right. You have the euro up a bit, pound dollar up a bit as well, dollar yen up a bit, Aussie dollar down, New Zealand dollar unchanged, dollar CAD up a bit, and dollar Swissy up a bit. So you see here the dollar is doing slightly better against the dollar Swissy and the dollar yen, and you have everything else is pretty much around the starting line, to be honest, without the exception of well, not even the Aussie dollar anymore. Everything is pretty much just a few pips away from where it started. So there's not too much activity today. The biggest sort of talked about event yesterday was crude oil prices and how they have been rising, and we'll talk about that as well. Now this is the euro, and we're still in an uptrend. As you can see here, the price is creating higher and higher lows, and I got interested in the euro dollar when the price traded above the July 31st high, which is this level here. It's actually this level here. We took out that level more or less at 117.52. That's when I got interested. We had a bullish day and then a corrective move, and yesterday it looked like it was, going. I mean, it was going in the right direction. I mean, if you look at it from a 4-hour perspective, it's all good. We did create a new weekly high, and that's important. But the market was not really able to hold on to the gains by the end of the day, which is a warning sign. In fact, anytime you buy something like this, like a breakout, and it doesn't quickly go into profit, then that's a warning sign. However, though, we are now in a position. I haven't made any changes to my stop loss orders myself yet. I'm observing the market, but we are in a position now to potentially order stop from 116.68, maybe to the breakout candle at 116.59, and thereby reducing the risk a bit. And eventually, I do suspect it's going to be enough just to reduce it to 17.21, which is the low here. Because, and this is also the short-term level that short-term traders are watching, because if we take this out, we wouldn't, at least in the very short term, we wouldn't be creating these higher lows, right? And when you take out a low, the markets usually spike a little bit lower, and I think it could spike maybe to 117. And then we'll see if we see a total collapse. I don't think we will see a total collapse, even if we do revisit 17. I think the market can go down a bit, and then you're going to have these big whales, people that have problems buying at breakouts. They will be potentially buying here, and maybe they'll put the stop orders down here, the stop loss orders. So I remain bullish on this market. In fact, I'm even long, but it's not really going with the momentum I wanted. And that's a bit of a warning sign. And if it doesn't work out, it doesn't work out. Something that did work out very good for me is actually crude oil prices. So we'll talk about that right now, just to give you an indication. I'm not long West Texas. I'm long the December contract in Brent crude, but it's the West Texas crude oil prices we've been talking about in this presentation. And here you can see how the market nicely spiked above the high and took out that September 4th high, and then now moved to the upside. It could easily and will probably move a little bit lower, maybe to 71.86, but this is nice because we hit that breakout level and then we quickly establish ourselves on the other side of it, which is important. And that's an indication really that we'll probably see further gains here. So I think, yes, we might revisit the September 4th low, but I think as long as we trade above something like 17.93, we should potentially be able to head higher, hopefully reach 74. And this is the interesting, because if one bought here, your effective risk right now is 60 cents. You hit 74, you make 251 cents. So 251 over 0.60, that's, sorry, 250 over 0.60. I don't know, I'm not sure what I'm doing here. Yes, 4 times the risk, which is really good. Obviously, initial stop loss would have been probably down here, but this is important. This goes in the right direction. We're in a position to lower the risk, and we can of course lower the position as well, or lower the risk in the euro dollar if we want to as well. And that's sort of what I might do eventually, because unless this starts to trade to the upside, I mean, even if it trades to the upside, I will reduce my risk. But obviously, the way prices right now is not really having too much momentum. So again, might revisit, but I think upwards. In the case of the pound versus the USD, I don't have a strong view here. I'm neutral this market, and I suspect here that, you know, if you look at it, we are 168 pip away from the closest high, and 348 pip away from the nearest low. That would be the swing low. And from a risk-reward ratio perspective, if you just buy here, you know, those numbers don't add up. You look to make less money than what you're risking. So that's why I don't have a strong view here. As well, this market went all the way up to the high and so far failed to take out 133. We corrected 50%. We can easily correct a bit more, but I do suspect we'll probably trade slightly sideways here with a bearish drift, maybe down to 130. Today as well, we're going to talk about the dollar yen. So you might remember dollar yen was quite boring, but I did share with you guys here in different articles and as well in live webinars. I said that a break to 111.83 would probably lift this market to the upside. We could potentially reach the July high, which we have now more or less reached. 113 is a nice level where traders are booking profits, and I suspect you know, scalpers are probably booking full positions here, whereas people that are looking for slightly further gains here will probably hold on, maybe book 50% of profit and maybe reduce stops to something like 112 or 112.20, sorry, 112 or 112.20, and then they'll see what happens with the rest here. I have talked about US interest rates in the past, the US 10-year yield, and I highlighted in an article on Trade Captain the break here, and I said that the break here could lift the US 10-year yield even higher, up towards 330, and I also said that a break to $3 or 3% of this August high would propel the market to the all-time high, sorry, to the 2018 high. We're now at the 2018 high, and macro fundamentally, the US economy is doing really well, and most people have jobs. Most people are even getting salary increases. If you and that is boosting interest rates. Now there's a very high correlation between the US government bond yield and the dollar yen, so that's why I think that maybe the dollar yen will most likely take out this high and potentially trade to 114, which is also the head and shoulders target. So you have a left, right shoulder and head on this daily chart. The break was here. The target is pretty much about around 114. And then we'll see what happens. If you zoom out and look at the daily, then this could be some major head and shoulders with a big head here. and the left and right shoulder, and that would suggest a potential target of about 900 pip, and the trend line for the head and shoulders would probably go, this is a bit difficult, these head and shoulders, but somewhere here. So 122 really, that could be the target. That might be actually what we're seeing right now. Some people are interpreting this like a big triangle as well, and I guess that might even be a safer bet. But what's interesting here is that even if you treat this like a big triangle, then the profit target here, this is a weekly by the way, let me get rid of this, it's a bit messy, this thing. Even if you do it like this, you know, the target is the same. So it doesn't really matter if you see it as a head and shoulders or a triangle. Triangles in general are very difficult to trade, but again, I think we could probably head to the upside. And you know, if we take out 114, which I don't think we're gonna take out easily, I think we're probably gonna go up to 114, and then everybody's gonna get super excited, and then this trades lower again, and then maybe after that we'll have another attack, and we take out 114. And if we do take out 114, then this is probably gonna be the market to focus on by the end of this year. Because again, we can have potentially a very, very nice profit here. Risks, of course, you know, it might not materialize and we actually might lose out. But it's something to keep an eye on this autumn. In regards to gold, gold is just trading sideways right now, and there's not much activity in this market, and it could become a very interesting market on a break to the downside, alternatively a break to the upside. All right, and we just need to wait for that patiently. You know, it could break either way. Obviously the euro is trying to break higher, so you know, I think maybe we'll break the upside here in gold, but there's not too much activity here at all in this market, and right now it's utterly boring. But we'll have a break here eventually, and when that happens, we'll probably have a nice little breakout. You know, maybe we'll, depending on what happens on the day, when and if, maybe it will be possible to short sell with a $9 risk to potentially make 24, and the upside is pretty much the same. We got a question about dollar Swissy, so let's take a look at that. So this is the dollar Swissy, and the dollar Swissy moved up quite substantially. I think it's influenced by the same sort of flows that is dominating the dollar yen, and technically it is bearish below 97.01, and it is possible to sell where we are right now, but it's not really sort of a top market I would focus on, because this, personally, I misjudged the dollar Swissy here already. Just a few days ago, I thought it was going to go lower without taking out this high. Instead, it went up, took out the high, and then moved lower. So I'm finding it a bit difficult. The last time I had a very good idea on this market was in August, when the market was trading in this head and shoulders, and we took out the level here and declined with 208 pip. There was a great opportunity, because if you look at from here, you know, the actual risk would have been about 64 pip to make 208, which was really good, and we hit that almost directly just a few days later. So yeah, I'm bearish below 97.01, and I think we could probably go to the downside, but out of a scale of, you know, 3 would be I'll trade the market, 2 would be like a yellow light, and red would be like ignore it. Sorry, and 1 would be ignore it. Then this is number 1 market to ignore. Crude oil, yeah, we already talked about it, and even you know, this is crude oil, which is actually what I bought at the end. I did trade a bit of US oil last week. That did not go out too good, so I closed that really early on. Here, Brent crude oil, it took out its high here. I got involved on the breakout, and this is hard to see right here, but I'm targeting 85-ish, so 85.50-ish. And here as well, you just want to work with some sort of a corrective move. And, you know, we might go maybe down to 80.77, maybe 80.15 in worst case. But I would argue as long as you trade above something like 79.38, this market should probably just head to the upside. Here's the S&P, and a few days ago we said look to buy here for break to the upside. It did go up higher, did not go all the way to its target though, and then it moved to the downside. These are markets, they don't move in straight lines. Not always, sometimes they do. The market is trying to bottom out here, and I'm just going to remain bullish. And there's two options here. Either one just, you know, maintains the original sort of stop loss at 29.01. The reason why you would like to maintain this is because this setup here is valid as long as we don't move aggressively back into the old range. As long as we don't move aggressively back into the old range, then it's fine. Now, if one did buy the break at here, then it wouldn't be anything weird with actually putting the stop loss just below the September 20th low. Why? Because it's morally, not morally, but it is mentally a bit draining if you had a nice profit and then it goes all the way down and gets you stopped out for the full risk. But if you just lose a little bit, that's usually good, and you know it's enough to sort of go back and trade the new setups. And it is important to sort of keep I mean, what do you call it? You know, to be sort of optimistic about your trading and not get sort of down. And if you ever feel down because you're trading, then it's no good to go back and trade more when that happens. In fact, you should take a break. The first signs you feel is that you're just trade tired and a bit moody. And when that happens, and I have that as well, especially now when I have a 6-month-old baby at home that cries and wakes up during the night, sometimes it's just better not to trade aggressively and just take a step back and just, you know, take a break over the weekend, sleep on it really. So keeping the mental drawdown limited is important, and that's why it would be nothing shameful with putting the stop loss here. The big problem with putting a stop loss here is, of course, that we could be easily spiked out. This is the DAX. No, this is the Dow Jones. This is the DAX. The DAX is, I think, trying to roll over. I don't want to be a seller at these levels, but in fact, I think if this market would do something like this, if it goes down and then up, then I will turn bullish, because we need to stop creating these lower and lower highs. But right now, it's a general risk, it just goes down. And here again, when you look at any sort of position, say you want to buy, well, you are 2% away from the closest high and 4% away from the closest low. So where's the risk-reward ratio here? Well, the risk-reward ratio favors bearish positions. And that's why I don't really want to have a strong view here. Now, finally, let's take a look at cryptos. Is Bitcoin, and Bitcoin is back under pressure. It's not looking too good, but it's also not looking too bad. The market has stayed here since September, and it's an utterly boring market. It will, however, explode as we start to move into this little range here, and it's going to be a good opportunity to either be selling or shorting, but definitely not buying, at least not right now. And this is actually quite good, what you're seeing right here. The fact that we didn't go all the way up to the September high means that eventually, if it spends enough time here, we'll be able to say, well, on the break to this high, we'll turn bullish. But right now, this is going to the downside and could potentially take out 5,786. And if it does, this market could go all the way down to 3,391. However, though, a word of caution, and I have shorted cryptos in the past, but just take a look at Ripple as an indication of what may happen if you get it wrong. So in Ripple, a few days ago, actually not a few days ago, for quite some time I've been bearish. The last time I actually bought crypto was in April when the market did that move. And I must have bought after that as well. I'm quite confident, but like a big positions was on this move here, not in this market specifically, but pushed to the upside. Now since then the market has been bearish, and I just maintained my bias being bearish. I said, look at this high, look at this high here, and then look at this high here. And the last idea was to say, you know, here I think traders are going to sell. And then the market pushed upwards, took out the August 18th high. That would have kicked out any short positions. But imagine if you would have kept it. This whole thing moved up with 200%, which technically means that you would have lost, even with no leverage, you would have lost whatever. I mean, obviously it depends. If you put 10% of your money, then yeah, you lose, I guess, 20% of your money. But if you would have gone all in, especially with margin, then you would have lost more. So this sort of move could happen to Bitcoin. So that's why, or any other crypto. So that's why I'm very careful, and I haven't actively shorted not stock markets, but cryptos, because of this situation where you can have a big spike. In regards to Ripple here, it's not looking too good, right? It's not really maintaining its profits. I think it has to do with the fact that if you look at Ethereum, you know, as I mentioned when I did my update on Trade Captain just a few days ago, Ethereum maintains a bearish downtrend. Bitcoin Cash maintains a downtrend. Bitcoin maintained this sort of sideways price action. And I think the only thing rallying higher was Stellar Lumens, which took out this high. Now there's nothing wrong trying out. You know, this is the whole trading is just a bunch of trial of error all the time, every day. And there's nothing wrong potentially being bullish here, targeting these levels. But now, as we're now breaking below again, it looks like this is not going to work out. And if we do trade below 0.22, 2270, then this market will again move to the downside, and this little bullish action we had in Stellar Lumens would be over, and everything else would just have reverted being bearish. There will be a time when cryptos are probably going to be good and interesting to buy, but looks like that's not going to happen anytime soon. Here is EOS, by the way, in some sort of a wedge or a triangle with a potential decline of about 32%, which would suggest a decline down to about $3.33 on a break, probably to this level down here. Actually, we need to do it like this. So it's looking a bit gloomy in crypto land right now. Again, I think there will be enough time for things to to improve, but not right now. And we're gonna finish off. I'm gonna see if you have any questions, but I'm gonna see if I could just show you something interesting. So this is a software called, or not software, it's called DAP Radar. If I knew about this in the past, and if people probably knew more about it, they'd probably be more careful with managing their risks. Kitties, they wrote about this on the BBC and other places. This is a special game that's run on the Ethereum network, and it was very popular at one point. And this, you could trade, I think it's like a Pokemon or something like that, and you can trade your kitties back and forward, and they were quite expensive actually. Now this game, which is supposed to revolutionize the world, or at least on Bitcoin, on blockchain, the most popular games have 420 users in the last 24 hours. That's not a lot of users. Then there's other sort of apps and applications, and you can see there's not too much happening on the Ethereum network, which is the second biggest sort of network. And this is EOS dApps, and here there's a little bit more users, so you see some more activity, 5,000 whatever PRA candy box, I'm not sure what that is. So there's definitely more activity happening here. But let's take a look here. This is charts, global charts, daily users of DApps. So on average, yesterday you had 11,400 people using these DApps. Okay, I'm going to see here. So 11,400 users yesterday. That's not a lot of people. And I'm just trying to figure out here how many people actually own Ethereum. I'm not going to be able to find it now, but I'm looking here for number of Ethereum wallets with money. I'm not going to be able to find it, but I think most of us all can agree that there are thousands of accounts, and yeah, I'm not sure how correct this is. I just came to this website. So they scan Ethereum accounts, and yeah, this is almost 2 million accounts. Sorry, I'll take that back. I'm totally misread this. According to, it says growth. I'm not sure what that actually means. I mean, if I look here, this looks like, yeah, this looks like 2 million almost. Okay, let's say it's 2 million, or maybe it's 40 million. I'm not sure. But even if it's 2 million, out of 2 million people with accounts, there's just 11,000 people using the applications. And that's a big, big warning sign. I think at one point, what needs to happen here is that if you're going to see sustained values in these networks and these coins, people need to use the product. Because if you don't use the product, then there's no real need for it. Doesn't make sense? Which is interesting. Like, I know some people are not gonna like this, but when Bitcoin was up here around 2000, was estimated by Interpol that I think 10% of the daily flow in cryptos was, not the daily flow, but there was X amount of billions of dollars that was used by illegal activities or shady money. And the market cap up here amounted to 10% of the total market cap. Now, these 10% are people that have a genuine need of using these products and services. So the genuine need here was 10% of the total market cap. So we could say, you know, keep all Bitcoins at the same level, so don't mine more. And when the price was here at almost 2,000 or 20,000, then the real genuine value should have been maybe $2,000. It was something like that, because that's really where the daily need of this. And that sort of gives a little bit of an indication of where we are right now. This market was moving way ahead. It was pricing in maybe the reality, the way it's gonna be maybe 10, 15 years from now. And that's why you have this volatility, because all financial variables, they will price in. You don't buy Bitcoin, well, some people buy Bitcoin today because they need to buy something in Bitcoin or move money back and forward. And that's the actual usage. But most of people, they buy Bitcoin today because they believe that their children are gonna use it. And that's where it becomes wrong sometimes. If too many people just buy it because of speculative purposes and not because they actually need the actual Bitcoin. Good morning, Tim. Thanks so much for joining us this morning. There's got a lot of people here, and I've been talking about cryptos all the time. So I have Tim, Guda, David, and Maurizio. And so looking for 117 to hold. Yeah, I hope so. I hope Eurodollar holds, definitely, because I'm long myself, really. And my stop loss is down here right now, and if it goes all the way down, I'll lose 2%. So I don't really want to see that. We have some sort of attack here. I'm not sure exactly why this actually happened, but I'm not liking this too much. But it is a break to a major level. So 117 and this whole area should really be supported. But if we trade below 116.68, I think it's definitely game over for the euro, and it will, in essence, crawl back where it came from, which is this range, and then we'll go back trading sideways again. But don't worry, there's other stuff. We mentioned it in the past. We talked about crude oil being bullish here. It's definitely going in the right direction, so I think that's something to focus on. Stock markets as well. We've been talking about the break to the upside, and now I'm talking about continuing to see this trade to the upside. So if Forex turns a bit boring, focus on other markets. There are markets that do move in tandem with stocks. You have dollar yen, you have euro yen, CAD yen, pound yen. You have all these different yen pairs that have okay correlation with stock markets. If they had a very tight correlation, then maybe dollar yen should be much higher. And this big pattern I talked about here in dollar yen, the break here could be an indication that suddenly cryptos are now catching, not cryptos, but the dollar yen is catching up with stock markets. So I think really good things are going to happen to Forex, but not necessarily right now. Okay guys, it's 9:38, slightly longer than those 10 minutes I was projecting. But I enjoy myself spending time with you guys and talking markets. So I want to thank you so much for watching, and I also want to thank you guys for your continued support. Tim, for example, I know you, I don't know, 5 years, something like that. It's been a long time. And hi as well. Maurizio as well has been here almost every day now since we started. So I want to thank you all for your continued support, and have a good trading day. Please don't forget to share and like the videos, and I'll see you guys tomorrow at the same time here at Trade Captain. Thank you.